Hey guys, DJ from PTA. I'm going to go over BIOR on January 10th of 2023. This was a pretty decent trade. I had a few people from the Discord ask me to go over this particular trade. I actually was going to do a video on this already, but I was talking to some of the people in the Discord, and they were like, "Yeah, you need to kind of go over that trade because some people made money, were in really good positions, end up giving a lot back because of the push during after hours." But this was a pretty decent trade. So definitely want to go over it, kind of give you some ideas of how this trade could have played out and how you could have entered it in a few sections or so. But more so, kind of just give you kind of an insight on how to play these type of trades and where the momentum and different things like that come from. So, as I always tell guys, go ahead and hit that like button, hit that subscribe, and don't forget to hit the notification bell so that you don't miss any of the new videos. I'm seeing that people starting to watch the content a little bit more, so I do appreciate that. I did get a shout out from a few people telling me that the music content in the background of the video was a little too loud, so I appreciate that feedback. So we're definitely working with the engineer to get that corrected this time around. So the month of January, I've only placed a couple trades on a couple stocks. I'm gonna probably try to go over those stocks over the next couple of days. But pretty much, I've only had maybe two trades for the month. Really, just been busy trading, helping others learn how to trade that have just been added to the staff. Really haven't been doing that many personal trades or trading with the group per se. So the training and everything is kind of taking up a lot of my time and getting different things, different things taken care of. So do appreciate you guys' patience and me loading the videos up kind of slow, but it does give you time to kind of do some research and practice and kind of understand how to place these trades properly, how to look at the chart, how to be patient and do those different things and respecting the support and resistance. So guys, we're gonna go over BIOR. This particular trade was something that I felt was a really solid trade. This is one of those like freebies, I think. And one of them trades is like really easy to place a trade on. Didn't really have to do too much on it. It was just something you can take a look at, place a significant amount of trade on it, and then the risk to reward was just phenomenal no matter which way you did it, from out of the higher time frame or the lower time frame. You just had a really good risk to reward when it comes to this. So guys, I was probably going to get placed on the Twitter account, so check out the Twitter, make sure you follow us on that. We also have just started ramping up the Instagram page as well, so take a look at that, make sure you follow us, click and subscribe on those things as well. So when we're going into this BIOR trade in particular, it was the risk that was very favorable for this, and I think that's what caused the inevitable squeeze that it ended up doing after hours as well. So to zoom in on this, as I always tell you guys, you got to draw your support and resistance. This is very critical to kind of understand where the stock is going. This 367 area, if you follow other videos, you know that the gray line is last week's high, the orange line is last month's high. So this was a critical area. We had a nice little breakdown from here. So I definitely see some support that came in right here. And this is probably why it bounced off that particular area, off that 560. But, realistically, you were beginning to squeeze out a lot of people that were in short positions simply because they have been in there for a while. We got a bit of a rejection here after two bounces support. So I'm going to say that 980 area was probably critical as well. And then we're going to put something like right here at this, I'm going to call it 1140. And that looks like pretty much it. Now we probably had a little area here in the 730 area as well. Remember, the turquoise lines is for the weekly, daily, bigger picture support and resistance areas. I got a support and resistance area at this 650, which was previous month high, and a nice flush. So those are your key areas that you want to pay attention to when it came to this stock. Now, breaking it down, let's go down to a 30-minute. One of the key things I want you to kind of remember is you gotta watch that pre-market volume. So in this particular stock, the pre-market volume on this was about 1.3 million. So it has some eyes and people taking a look at it. Ultimately, previous week's volume was 1.4. So let's put that in perspective. You had a whole week worth of volume at 1.4 million, and just in pre-market today you had 1.3. That is one of the triggering mechanisms that we take a look at a stock, because that's abnormal. You go from producing literally a week's worth of volume within the pre-market stance. That's going to put things on the radar. Yesterday's volume was at 389,000 for the day. So with today ending out at around 55 million, this stock was just beyond more volume than it normally would have during a particular day or whatever the case that may have been. So the way the trade kind of played out, it was a really good trade overall, because we got a nice little pullback fresh out of pre-market, and that was that here, this nice little 30-minute pullback. So what I always like to do when I look at my charts and stuff, I kind of pay attention to where the pullbacks and stuff were happening at. So we had this nice little area here, and then we got this nice little pullback. That's what you saw, the two 30-minute red candles. We put out the one hour candle on the pullback, and then you had a nice push back up. So ideal entry would have been somewhere off of this area here. Let me see what that price was. About 275. Somewhere around there was a key area to go ahead and place that trade. And as you see, didn't really get to that area till after about 12 noon Eastern Standard. So I'm gonna put that as just an area of interest. We're gonna make that orange. So I'm gonna start showing you the support. Now let's pay attention to this, because this is very critical. The low for the month, or the low of that week, prior to that period of time, was at 187. So even if you wanted to risk something small, you had a 275 to 187 risk, you're looking at maybe a buck. You know what I'm saying? The ATR on this wasn't as high as it needed to be. The range was about a buck, but this is a dollar risk that you had just from this key area here, back over here to this 187. When it started to hold at 187, even if you traded from the day before, the low of yesterday was at 196. So you still had step up here, increase in volume. These are the indicators, these are the signs that this stock has legs. This stock wants to go somewhere. Not sure where, you can't predict that, but where the support is coming in at. So after we had came back, retested previous day close price, that's the green line. Previous day low is the red line at 196 area. So now you have yesterday's high. So you had pretty much the stock trading above yesterday's area. So when you get a stock that breaks out, come back, retest, and is holding the previous day high, the next step will be for something, whatever was dictated the day before or into that day, which will be this pre-market high coming into today. That will be your key area to look at for entry. Look at first area of actual resistance. As you can see, it hit that area, and then it pulled back, and then it hit. As you can also see that it wasn't over the 200. As it got over the 200 on the entry day, that's when it really got some legs. So now let's zoom in on the time frame to kind of get an idea of what that trade looked like. Now, this trade here would have been an entry somewhere off of this area. Now, let's take a look at this. You can see as it started to build support, you had the volume, people looking at it. It's holding the previous day high. It's holding previous day close. It's holding previous day. It's pretty much higher than the stock price was the day before with volume, and an increase in volume from the previous day. So if I'm only trading about 390,000, but yet today I'm already at 1.3, and I'm holding higher pricing than the previous day high, then that's a great indication, great risk to reward area to be in. So at 275, you could have risked it to 225, which was previous day high, and been pretty safe. So you're talking about a risk factor from, let me draw this out for you, a risk factor that was literally like 50 cents. Now, that 50-cent risk is what made this very, very favorable. Now, you could have loaded in heavy and maybe had $1 risk or something like that, and you would have been risking off of the previous low and pretty much the low of the year. So what you have in these factors, and this is what we talk about confluence. I believe I talked about that on a few other videos, so definitely check out those other videos within the library. But confluence is a big thing when it comes to trading. A lot of people talk about it, hint around it or whatever, but I'm gonna give you what it really is. What it is just multiple things happening in a particular area at the same time. So what is our confluence on this? We're trading above the 52-week low. That's one. Second piece, we're trading above the previous day high. The third piece, we're trading above the previous day high with extensive volume. We had almost already triple, if not quadruple, the previous day volume just in pre-market and still holding that area. That's what these traders are looking at when it comes to a momentum shift. So the only other way it can go is going up. It would have been a massive amount of volume would have had to come in to keep that stock below, but obviously they wanted it higher. So we got a 275 entry, which was about here, give or take. This was pretty much your risk, was this area here, which was about 50 cents. And then your gain, so if you're risking 50 cents, you're going 3 to 1, you're looking at 150 or $2 gain. So at 271, anywhere between 275, anywhere between, you know, $1.50, $2 gain, let's just call it $2 gain for a 4 to 1, that would have been around, you know, 675. So let's look at the areas. And again, our first area was 367, and then we ran into the 560s before we closed. So just off of that alone, you know, $1.50 move. So remember, I always talk about it being somewhere around 3 to 1, 4 to 1. So that 3 to 1 move or $1.50 at your entry would have been easily, you know, say $1.50, 275. That would have easily been a $4.25 area getting out. So I got in here, you basically would have got out right around here somewhere. And you can see when you start to understand the price action, you can actually see where everybody's getting out, because everybody's thinking the same thing. It's like, hey, it's a 50-cent risk. I'm gonna go 3 to 1. 3 to 1 is 420s. So as soon as it got back up here to 480s, people start releasing, and then we got a pullback. You can even see the pullback right here in the 390s, 4s, because people got close to that 3 to 1 and was like, okay, I'm gonna just do it. So when you look at it and you see this might have been the first little spook, but look at the first little rip was up into the 407. I mean, yeah, that's 15, you know, cent or so away from your price target of 425. But again, if you're that close to having a 3 to 1 trade, you're gonna take something off, and that's probably why you had this little dip here. But then there's ones that, you know, they hit their price target, it hit. When it hit, it started to pull back, got a bit of a whiplash, and then it took off for the day. So as it kept going, now you're hitting a critical area of 560, but it's after hours. So you got a lot of people that's stuck in the trade. So then it starts to ramp back up. So the shorts couldn't take it over, broke, retest, went back up to the next area, 730, test, and then went up to 940 and came back and returned to 730s. So that type of trading essentially allows you to see the pinpoints and areas. The support and resistance areas are already marked. So you already know you're in those key areas because just look at how the chart reacts. Soon as it hit that 560 before it closed the market that day, it came back and pulled right in that area. I mean, it literally hit 562, then pulled back. Tried it again at 563 and pulled back. So you already know that there's orders sitting there that's being filled, which is pushing the stock price back down. Now, that's where you being mindful of where you're at in the trade, taking profit in the key areas is where you make your most. For this particular trade, for one of our traders, he ended up getting out into the 730s, simply because this ramp that came up in here, I think he said he sold it in the 743s, and he said he got a few shares off in the 760s as it started to pull away. Now, in hindsight, that trader probably looked back and said, man, I could have held the 940. But realistically, you've already overextended at that point in time. Remember, at a 275 entry, and you literally getting out in the 740s. I mean, you're talking about a $4.65 gain. Remember, that's like a 9-to-1. You get what I'm saying? That's like a 9-to-1 trade. That's phenomenal. If you get that all day, every day, you'll be a phenomenal trader. But reaching for that 3-to-1, 4-to-1 is ideal. And as you can see, the stock, the price action, and everything else respected that. So again, guys, that confluence is very critical, because when you can see these things manifesting before it happens, then you can prepare yourself for this particular trade. So honestly, when you look at this, you can say, okay, I got an increase in volume from the day before. I'm trading above the previous day high, close, and low price. So I'm trading higher than the day before with more volume. With all that being said, it's just a matter of waiting for a potential setup and then finding that key area to actually get in. One of the things that, all that being said, and another factor was the news. It said a FDA ruling. So anything with the letters FDA is pretty much going to be everyone's and their granddaddy going to be looking at the stock, simply because of those key terms. And we talked about that in other videos in reference to, if I see FDA, if I see some type of merger, if I see some bigger known company, Amazon, Bed Bath & Beyond, blah, 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 whoever it may be, that's a bigger company that's being involved with this company, then that's something to take a look at. So when you start to see biotechs or bio companies, medical companies talking about FDA rulings, stage 1, 2, 3, you start to see those type of things, and you have all these other things adding up, then that puts more and more eyes onto the stock. Volume equals to me is eyes. The more volume I see in the stock, the more I see other people looking at it, the more I think that that's going to be the one that runs. And this was the one that ended up running. So I think it ended up going to like 940. It pulled back, and then it ended up coming back and washing the previous day. Again, these are just momentum. You're following the trend type of stocks. It's not something you buy, invest, hold for long term, unless that's what you want to do. But I like to kind of get in and get the meat of the move and then kind of take it from there. So, all right, gang, if you have any questions, concerns, leave it in the comments section. Make sure you hit that like button, subscribe, and hit that notification bell so you don't miss any of our videos. And as I tell old traders and new, stay studying and stay focused.